For the Investing News Network, I'm Brian McGovern, here today with Nawan Butt, an Associate Portfolio Manager with Purpose Investments. Nawan, thank you so much for your time.
Thank you for having me.
Let's take a quick recap of the cannabis sector so far in 2019. What has been your take in this space? What have you noticed in terms of trends as we hit the halfway point in the year?
So late last year, we saw most cannabis investment move to the U.S., and that has been the target of this year's investment thesis as well. We have continued to see an increase in the jurisdictions that provide some sort of legalization in the U.S., which has freed up companies to do greater amounts of business. Other than that, we're also seeing lots of international exposure. International exposure is increasing really fast. The UK is starting to come online slowly. Germany put up their tenders. Australia is ramping up. So it's really going international, adding jurisdictions, and moving away from the old Canadian story of LPs. Canadian LPs have more so moved towards the story of who can execute now. And but that will sort of, we've seen Q1 earnings at this point, so we have an idea of who's doing well and who's doing not so well, but it'll really start showing once everybody's is up on their capacity and running a full-out extraction and processing. So by Q2, Q3, we'll have a pretty good idea of who the winners and losers in Canada are.
Yeah. In a long-term perspective, you mentioned the investment sentiment has moved towards the U.S. You mentioned some of the early results that we've seen from the Canadian growers in terms of the Canadian market and how disappointment there's been for some investors in that space. Long term, do you foresee the interest coming back to Canada at any point, or do you feel like in the race between the two, is it kind of a given, like if you're investing in Canadian companies, it has to be at an international scale? What is their big term goal? Do they even have plans in the US? Is there still a Canadian only play, or do you foresee everything moving forward in terms of like US investments or international?
No, I actually think there's still a lot of opportunity left in Canada. The opportunity more so lies in identifying execution at a large scale, or large scale execution, getting cultivation right. One of the problems that we saw in Canada was everybody started putting up these huge greenhouses, 50,000 square feet, 100,000 square feet, rooms that would have tons of plants in them. But nobody really knew how to grow cannabis at that sort of scale, because historically, cannabis cultivators have been working in 2,000 square foot, 4,000 square foot rooms in small spaces. So transferring that knowledge base into a very large scale cultivation has been problematic. That's why we've seen yield so low. We've seen problems with getting the amount of yield that you need to be getting to supply this market. So that's why we've had supply constraints as well. So I do think there is an opportunity where once the big guys start getting it right, you'll see a lot more efficiency in the Canadian markets, which will lead to a lot more consolidation as well once the industry matures. So there definitely is opportunity. One of the places, the other place that Canada still has opportunity is as regulation decreases, which is going to happen. Right now, even though we're legalized, we're still highly regulated. We only have flower and somewhat vapes and capsules. But once we get to October 2019 of this year, there's going to be another step of liberalization that's going to happen. And within that, product formulation is going to be huge. Just the ways to grab the incremental user of cannabis actually come online. So far, we've been making the black market turn over to the regular market, to the legal channels. And what's going to happen? And people who didn't smoke their whole life are not going to smoke now. So what's going to happen is once edibles come online, you will get that incremental user who might, because they don't see the harm in it, which smoking usually has the stigma off, they'll start coming online. So there will be further development of one product formulation and then the execution as it comes into space. So there's still lots of opportunity left in Canada.
Yeah, you mentioned obviously, and just a clarification, I think it's October 17, the deadline for legalization.
October 17, 2019, yes.
Yeah, exactly, for the edible market. Are you very bullish on this market offering sort of a revival for the Canadian stocks in this aspect, in terms of if we start to see these sales of edibles, beverages, all these other products, is that offering a revival or a new entry or sort of a catalyst for the Canadian space?
Well, what it will do is it takes all of the, so we've taken a look at cultivation, and we're already at the point where we can say, Q2 to Q4 next year sometime will be in excess capacity. But what it does is it takes that excess capacity, puts it down into an extracted format, into a processed format, and gives it off to a new consumer. Now, that creates opportunity for not just the big guys in the space, but all the middle space guys. So, and with market caps anywhere between 200 and 400 million, 600 million, all the guys that have been ignored in the space, they'll start coming back because they are now developing strategies as to how to get that, how to capture that incremental user by using extraction-based, processing-based, edibles, vapes, all these newer technologies. So we will see somewhat of a revitalization.
Yeah. Nawan, going back to the U.S. market, you had previously told us, that the Purpose Investments ETF was focusing on the U.S. market more and more, leaving the Canadian names behind for later. What is the trend that has been so far this year? Do you foresee that continuing? The U.S. market is still going on as the strong suit for the ETF?
So we've come to a very nice balance, I think. So what we've done in general is 50-50 between Canada and U.S. Canada, where we have identified the undervalued opportunity. In the U.S., where we have identified the oligopolistic opportunity. And that lies mostly in the heavily regulated states and in the vertically integrated states. So we've been invested in US MSOs, and we still think there's opportunity there, although that space might be getting ahead of itself pretty soon too, like the Canadian LPs did. So we're very careful of where valuations are, or in this case, it would be the relative valuations are. And but there is an increase now in the US because now some of the fragmented markets are starting to come online and have access to investor capital. So California is going to be very, very interesting. There's very few public companies in California that actually have good footprints. There's very few MSOs in California that have decent footprints. In addition to that, it's a highly fragmented market. Like nobody has more than 2 to 3% of market share. So once we start seeing the model that's available in California, there might be more opportunity there. The other thing that we've done is we've carved out space in our portfolio for international exposure. We think Europe is going to be very, very interesting within the next 2 to 4 years. They're not moving as quickly as we would like, but on the CBD side, we have seen fair progression. And there will always be space to grab that incremental geography as well.
Yeah. I wanted to ask you specifically on the stock market and sort of investors, their options that they're getting. Obviously, Cannabis Rush has created a lot of newcomers into the space. We've seen the TSX, we've seen the TSXV, we've seen the CSE explode with a lot of listings. And now, for example, we got new listings on the New York Exchange. We got Australian companies coming up. Like you mentioned, England, is coming up as well. All the US MSOs have sort of offered a brand new plate of options for investors. What is your best advice in terms of how to navigate this massive universe of stocks? How to best approach it, or where to start, or how to go about it? Because sometimes it just feels like the list of stocks, it just keeps growing and keeps growing. And before, there was predictions that this glut was going to compress really quickly in 2019, but it just feels like more and more listings are coming online now.
So I do agree that the glut is going to consolidate. Timelines get thrown off sometimes. We've seen the timeline of additional jurisdictions come online. That timeline got sped up, but the timeline of consolidation got slowed down. So, but the thesis still holds because economically, that is what will make sense for a lot of these players. As far as circumnavigating the space goes, it's a difficult question to ask on a very large scale because there are so many names in the space that could potentially be the winners of tomorrow. There are clear leaders. We have seen that. We think Bruce has done a great job making Canopy one of the premier names in the space. We think the same of Aurora, of Organigram, of Hexo. We do think these guys will be almost your blue chip. Once we get over this, initial stage of volatility, 5 years down, these will be your blue chip stocks of the space. Going back to how to invest, For the retail investor, if you can specifically research the jurisdictions that you want to invest in, dependent on the jurisdiction that you want to invest in, it looks very different on how you're going to be investing. Whereas in Canada, I think the best opportunity is to stick with the big guys, with the guys who you think are undervalued. Organigram is undervalued, Hexo is undervalued. And in the States, it's going to be slightly different. In the States, it's still a land grab if you're dealing with the MSOs. So if you go on the East Coast, you want to be dealing with the MSOs where they can capture everything in the highly regulated states. In the West Coast, you want to be more niche and you want to understand branding and marketing strategies of the companies operating there just because they have a little bit more liberal regulations. And in the UK, what you want, in the UK and Europe, what you want to do is you want to stay on the CBD side of things right now until they get comfortable with medical marijuana and the listings of medical marijuana in that space. So geography by geography, I think because there's so many different regulations, it's different what you want to do. So just be focused on the laws and the regulations around it. That's probably the most important thing because you don't want to be caught up investing in a company that becomes offside on legal proceeding or legal complications around their business.
Yeah. And as the last thing, I do want to ask you, obviously one of the latest trends in the sector, thanks to the Farm Bill in the US, has been the CBD from hemp explosion in the US as well. We've seen established retailers, pharmacies start to sell these products. From an investment point of view, can you talk about sort of how to keep up with this aspect where now it feels like some of the names are also starting to carry the CBD products or they're going to launch CBD lines in the US, and it sort of adds a whole new dynamic. And being such a rush for these products, it almost feels like, again, a lot of products are just getting attached to the name CBD, or a lot of companies are just announcing CBD plans, launching CBD plans. What's the way that you go about it when you're looking at these options?
So the Farm Bill really opened up the space for the big CPG companies and the big retailers to come in and start taking a head start. The problem with CBD right now is it hasn't been legal enough for us to have enough medical and trial evidence to say what the efficacy on different conditions is going to be. But anecdotally speaking, we know it helps people. And as long as it helps people, there will be a demand for it, which means there's a market for it. Now, the way you want to take a look at CBD now is all these big companies are going into CBD because they see an opportunity. They want to be at the very beginning of the investment curve for this. With time, we will see the right formulations that get you to the right treatment of the inflammation that you're looking for any sort of disease that you might have. There's 140 different CBD cannabinoids. Which all have some sort of a different effect with your endocannabinoid system. So there will be science that proves this out, and once the science comes, really this thing will really take off. We've also seen some real legitimization of this space with the FDA approving Sativex and Epidiolex from GW Pharma, which means that that promise is really not that far off of CBD having legitimate uses, therapeutic uses. So like the best way to invest in this space, I actually think it's going to be a very large space. We're going to see a little bit of CBD in everything, but right now there's almost this frenzy or this mania of the pouring a little bit of CBD into everything. That might not be the best solution about it because we don't know the long-term effects CBD might have. So it might not be the best to have CBD in your baby formula, but what you do want to do is where CBD has anecdotally shown to make sense in nutraceuticals, in topicals, those things make a lot of sense to us right now.
Okay, sounds good. Nawan, thank you so much for your time. Really appreciate it.
Yeah, thank you for having me.
For the Investing News Network, I am Brian McGovern. Don't forget to follow us on Facebook, on Twitter, and on LinkedIn. See you next time.